So if you're wondering who I am, I'm Mitchell Ewer. I'm one of the principal advisors from A4G. A4G stands for Accountants Growth. We're accountants and business advisors that are passionate about working with entrepreneurs that are keen to grow their businesses and their investments. We're a 5-partner firm with 80 members of staff, which means there's a lot of experience under one roof. But in terms of my career, I've worked for A4G for 13 years and I'm a qualified chartered accountant. And where I spend most of my time is providing clients with strategy and tax planning advice, in particular to property investors. Today I will be presenting alongside Tamara Renshaw from Productivity Finance, Maxine Fothergill from Amex Estates, Marion Money from the National Residential Landlords Association, and Simon Steele-Williams from Parfitt Cresswell Solicitors. So I'll be kicking us off today by covering the different property ownership structures, the key decision factors when it comes to property structuring, and answering your most frequently asked questions. So let's start with the different property ownership structures. And the first we have is a sole personal ownership. So this is the simplest structure, but it offers no personal liability if you're sued. The business profits are all taxed on you personally, and this is whether you reinvest the cash or draw it personally. Then we have a partnership. So with a partnership, you and your partners are jointly liable for the business debts. The partnership itself doesn't pay tax. Each partner will pay tax on their share of the profits. Next, we have a limited company. So a limited company is a separate legal entity from the business owners, and shareholders are not personally liable except under personal guarantee with mortgages. The company pays corporation tax on its profits, and then those profits can either be retained or distributed to shareholders who pay tax on their dividends. Finally, we have a limited liability partnership. So this is similar to a partnership, but this time with limited liability. An LLP, again, doesn't pay any tax on its profits. Each member will pay tax on their share of the profits. And with an LLP, this hybrid structure provides flexibility with profit sharing and inheritance tax planning. So there's the 4 main property structures. And whilst you don't have to stick with one, you can have more than just one. It's generally cheaper to structure it right from the outset rather than try to restructure it later. We then move on to the key decision factors that come with property structuring. And the 3 key decision factors come down to your amount of lending. So high income earners with high lending are usually restricted by the amount of tax relief they can get on their lending. Your drawing needs. So depending on how much you need to draw from the business will depend on how much tax you pay. Because with a limited company, you'll likely pay more tax if you're drawing all the funds from the business. Your long-term strategy and exit plans then need to be factored in as well. Because if you're looking at selling the property, you'll likely pay 2 sets of tax to sell the property and then draw the funds from the company. We now move on to the most frequently asked questions when it comes to property structuring. With the first being, why would you put property into a limited company? So mortgage payments are usually your largest cost when it comes to running a property portfolio. And the property gurus of the internet claim that everyone needs a limited company because of Section 24. But to understand why you want to put property in a limited company, you first need to understand the impact of Section 24 on you personally. So what are the implications of Section 24? Section 24 was phased in over a 4-year period, and it was originally brought in 2017. So landlords holding property in their personal name used to be able to deduct the full cost of their mortgage interest against their rental income, and then pay tax on their rental profits. However, Section 24 has made it where landlords holding property in their personal name are no longer able to deduct the full cost of their mortgage interest, and instead they get a 20% tax credit to offset against their tax liability. So when we look at a basic rate taxpayer who's paying tax at 20%, they're effectively getting all of their mortgage interest as a cost to deduct against their rental profits. However, the question is, if you're growing a property portfolio, how many properties will it take to become a high rate taxpayer? So once you factor in your other income, it might only take 2 or 3 properties. So now when we look at a high rate taxpayer who's paying tax at 40%, but again can only deduct 20% of their tax, of their mortgage interest against their tax liability, well now they're only getting half of their mortgage interest as a cost to deduct. And if your mortgage interest costs have shot up over the last few years, some will find that they're paying tax despite not actually making any real profit. And this is what causes everyone to then think that they need a limited company. So why a limited company then? Well, Section 24 mortgage interest costs only affect individual landlords and not limited companies. And limited companies can deduct the full cost of their mortgage interest. So now we have a good understanding of Section 24, let's look at some other reasons why you put property into a limited company. With the next being the corporation tax rates that the company pay. So for reference here, I'm comparing a 40% high rate taxpayer against a company who pay tax at 19%. And as we said, a limited company can offset 100% of its mortgage interest costs. Then if the profits are retained within the company, there's no additional tax, because extra tax only applies when you draw funds from the limited company. So if you are looking at drawing the funds from the limited company, you'll likely pay dividend tax rates at 8.75% for a basic rate taxpayer, 33.75% for a high rate taxpayer, or 39.35% for an additional rate taxpayer. So now don't worry if I lose you on this next slide, because things get a bit complicated here. But to work out the effective rate of tax on your drawings, if we took profits of 100% and took off the corporation tax at 19%, that then leaves profits to be able to take as a dividend of 81%. If we apply a dividend tax rate for a high rate taxpayer at 33.75% on the 81%, we then get 27.34% as a tax rate. Now, if we take that tax rate and add that to the 19% corporation tax that you're paying into company, well, now in a limited company, you're now paying more tax than you would personally. So one thing to note about limited companies is that unlike in your personal name, the company doesn't have any tax-free allowances. So all profits are immediately taxed at 19%. However, some companies will find that they're paying tax at 26.5%. So to try to explain this, if you look at profit, if profits are below 50,000, you pay tax at 19%. And any profits above 250,000 are taxed at 25%. Then anyone that falls in between these two will pay tax at 26.5%. And the reason for the 26.5% is it gradually brings up the 19% to 25%. So many think they could just set up another limited company and get another 50,000 at 19%. However, there's associated company rules that prevent this from happening. So now when you come to sell a property, capital gains tax is paid on the increase between the purchase price and the sale price. So if we take the same example we had earlier for a high rate taxpayer, we'll pay capital gains tax now at 24% versus a limited company that pays tax at 26.5%. There's not too much difference between the two. However, once you've sold the property in a limited company, you've then got to draw those funds out. So you're then likely going to be paying twice as much tax as you personally. So our next frequently asked question is, can I move my existing properties into a limited company? And whilst it is possible to move your properties into a limited company, the problem that comes with this is the company is its own separate legal entity, so it would start to own the properties in its own name. This means that if you want to transfer the properties, then you're likely going to pay capital gains tax and stamp duty land tax on the transfer. And this often outweighs the benefit. There is the possibility of incorporation relief, and this is designed to delay the taxes that you pay transferring properties. But it's not as straightforward as it sounds, as you have to satisfy to HMRC that trading business exists. So the normal rental activities won't qualify for this relief. But if you're running a partnership for at least 3 years, and you have at least 6 properties, plus you can show to HMRC that you're running a trading business, then you may be eligible for this relief. And then we can look at this on a case-by-case basis for you. So alternatively, why would you put property into an LLP? So the benefits of an LLP are when you come to transferring property, if the beneficial ownership after the transfer is the same as it was before the transfer, there is a possibility to minimise the capital gains tax and stamp duty land tax on the transfer. LLPs also provide flexibility in profit sharing. So members in an LLP can decide how profit and losses are shared between them. So if you've got children involved in managing the properties on your behalf, you can provide an income to them in the future. LLPs provide inheritance tax planning also. So the uplift in the value of your properties can be allocated to your children. And finally, when it comes to company cars, unlike in a limited company, members of an LLP are not considered employees. So there'll be no extra tax on that Porsche that you wanted. Overall, LLPs offer flexibility and freedom to design a profit arrangement that suits your needs and goals. So how can A4G help? At the very least, I recommend you visit our website to access our free blogs. Whilst there, you can subscribe to our newsletter and join our 8,500 subscribers who receive up-to-date advice like this. However, if you're serious about growing your portfolio, I urge you to book a one-to-one consultation with me, because as you can see, a one size doesn't fit all. And for many of our clients, we provide a bespoke tax planning review and advise them of the best way forwards. I'm now going to hand you over to Tamara, who's going to cover how to finance the growth of your property portfolio.
Good afternoon, everybody. Thank you. My name is Tamara Renshaw and my company is Productivity Finance. Now, some people also know me as the lady checkbook when it comes to completion. My background comes from banking. I had 2.5 decades in the high street bank, so finance is kind of in my DNA. And about 7 years ago, I got bored of corporate life and one-to-ones and year-end appraisals and decided to set up my own brokerage. I'm up in Bexley Heath, work from home, so it's a lovely work-life balance. And we're a whole-of-market brokerage. What that means is that anybody out there who's got money to lend are probably on our panel. They're likely to work with us. I do belong to a network like most mortgage advisors and IFAs belong to, which affords us really, preferential and preferred rates, SLAs, turnaround times and everything, which is what every landlord and property investor is looking for. So today we're going to talk about 3 different types of property finance lending. Yes, we're going to talk about 3 different types of property lending. The first one will be your straightforward buy-to-let mortgages for landlords, bridging finance, and then true property development finance. Now, all of the funders that we work with, they are in the market. We've got a lot of new emerging finance companies, particularly in the bridging space. They are there to grow, market share and everything. We're looking to level what targets. We had a phase about 1.5 years ago when rates were extremely high and everything, and the whole market came to a standstill. But they are very much open for business now. Fixed rates are coming down. Base rate is on its way down, albeit the last two months, I think, at the open we haven't 2 months, which haven't had any movement for 2 months, but we are hoping that they are going to start dropping. So 2, 3 and 5 year fixed rates are available. So landlords are looking for straightforward flats, purpose-built flats, conversion flats, HMOs. We look after bridging finance, auction finance, students and nursing accommodation up and down the UK. Could be that most of you are probably from Medway in the Kent area, but you've got properties up north. So we are a national company. If you've got properties anywhere in the UK, we can deal with that. Student and nursing accommodation in some of these university and big hospital towns, that's really high yielding at the moment. So if you are looking to look for properties, they're the best cities and towns to look out in. We also deal with commercial mortgages for trading businesses, but for today's purposes, it's all about property investment. So, the local trading park, retail, hospitality, any of those commercial entities we can deal with as well, particularly semi-commercial. So there's been a bit of a thing in the past where a lot of funders are scared of shops, at street level, fast food establishments, bookmakers, pop-up phone stores which come and go every year. They're not your best tenant, but if you've got a good retailer on the high street that's been there for 10, 20 years, they're very good and very high yielding with flats above. So the type of funders that we work with, of course, all of the high street banks, the smaller building societies, bridging specialists, auction finance providers who are totally on board to gear up and get that completion done within the 30 days that's necessary. We're dealing with quite a lot of property developer exits. This is where property developer hasn't perhaps finished on time or has gone over budget. Your current lender is looking to exit you, they want their money back. So we then bridge it again onto another with a new funder. Now, revolving credit, spoken to quite a few of you about this in the room today. Who remembers those hunting licenses that the banks provided almost a decade ago? They are coming back. And this basically is where you provide the funder with some security, doesn't have to be unencumbered. And two of the funders that we're working with are gearing up on that security property, which then gives you you can literally phone them up the next day and say, I need 200 or 300 grand to go to auction or to renovate my properties out around my portfolio. And it's a really good revolving credit facility. You can pay it back and forth like that. So these are the type of funders that we work with. So buy-to-let mortgages then, as Mitch mentioned, it's really important to get the structure right in the first instance. I've got lots of landlords who have held properties in their sole trade name for donkey's years, now to put it into a limited company, and it's really proving costly and not tax efficient at all. So make sure you do speak to an accountant about that. But the 3 or 4 entities there, every funder was happy to do that. 80% loan to value mortgages are now back. Remember that just because it's 80, 75 or 80%, it's also dependent on the rental income that drives the size of the mortgage that you can get. So don't just think, I've got 25, 30% to put into the deal. It's all about what rental income can get you as well. A bit like the personal mortgages with your income salaries. So 80% are back. Product fees are still really expensive, anything between 2 and 5%. A couple of lenders are still up at 7%. Trying to avoid them like a barge pole. But these can be added to the mortgage. You don't have to pay them up front, which brings the cost down. First-time landlords, if you've got a portfolio, then anything in a limited company is classed as a portfolio landlord, even if you've only got one. So there's no real difference in pricing, whether you're in your personal name or in a limited company, but it's just important to know whether you're a portfolio landlord or not. First and second charges, everybody does first and seconds. So depending on who your lender's with, there shouldn't be any problem getting their consent to put a second charge behind it. Right, so moving on to bridging finance. Bridging finance, so this does exactly what it says on the can. It bridges the gap between buying and selling properties. We've got people who fall in love with their dream home and can't sell their existing home, so we put it on a bridging product for you. LTVs on bridging is a little bit lower, about 70% gross loan to value. So after all the interest that's been added on, 70% is about the maximum that you can get. Again, you can get first and second charges on bridging. Most funders want the minimum term to be 3 months, so they can get their money back if you like. But unregulated bridging is up to 2 or 3 years. So if it's a big ground-up development for a true property developer, then 2 to 3 years is probably the norm. Interest is rolled up, so as property investors, cash is really tight, and we haven't got a lot of that slushing around, so all the interest is rolled up and added up at exit. And this is a great product for your light and medium refurbishment projects. Now, bridging and the next slide, which is true development finance, one thing which is super, super important is the proposed exit. And you can change your mind halfway through. So yes, you're going to do a property, you're going to do it up, and then you think, I'm going to, 3 or 4 months' time, I'm going to flip it onto a buy-to-let mortgage. But then you change your mind, you want to release some capital for your next project. But it's just really important to, if you are going to sell it, allow that in your marketing time. So if you take a bridging facility for 6 months, because that's how long it's going to take you to build it out, you then might need to, have at least 6 to 8 weeks to put it onto a buy-to-let mortgage, for it to be valued, go through legals, then find a buyer. So it's really important to add on at least 3 to 4 months possibly. And you'll only ever pay for the amount of days that you're borrowing the money. There's no early repayment penalties on bridging finance. Okay, last one is true development finance. This is, funders really prefer to do this really for your experienced developers, people who've got a track record behind them. Yes, we do get a lot of builders come to us to say that they've been working for main contracts for donkey's years, decide to go out on their own, and that's fine as long as they can demonstrate that they've been working for a big, contractor, they've got a mechanical engineering background or something like that. They just need to provide for us, and give comfort to that lender that they've got the skill set to bring it right through to completion, rather than collapse halfway through and then the lender's trying to offload property. So it's a true ground-up development, putting the spade in the ground and starting from scratch, maybe some demolition as well is built in. And it could be just a single home, it could be a small parade. I have a customer who built a small close with 6 houses in it. But the important thing is that speculative planning is now a thing of the past. So it's got to be, full planning permission or permitted development in place with your local council before, not before drawdown, but before actually application goes into the funder. Lots of conversions from commercial to resi, lots of vacant shop spaces being converted into flats. Funders are really, liking that at the moment. And again, with development finance, the LTV drops a little bit further, down to about 65% growth as well. So they'll give you 65% of the purchase price, but you'll get 100% funding on the entire build cost. So what happens when you approach a funder? These are the few things which they're going to need. They're going to want to have a bit of a CV from you, full schedule of works, full cost of the breakdown. So by the time you come to me for an application to go in, you would have spoken to an architect, had your elevations and drawings and everything done, and then we present that to a funder. Usually I choose 2 or 3 funders, not to sort of set them off against one another, but to get the best indicative terms from each one to present back to you, and then you can choose who you want to go with. And again, what's your exit plan? Okay. With development finance, it's all done on tranche drawdowns or staged drawdowns. So when the valuer goes out on day one after the purchase has gone through, they'll know exactly what needs to be done from the schedule and the cost breakdown. So they'll write to the funder with an architect certificate and say they need 100 grand, and then they'll fund it for you. And then 2 or 3 weeks or 6 weeks later, we'll go back out, and at each stage they'll send a certificate back to the lender to say you can have some more money, please. Some funders expect you to pay that up front and the lender will reimburse you, but there are some funders now providing finance up front. That's development finance. So what next? Obviously we're around afterwards. Hope you'll join us for a drink in the bar. We're going to do some good networking. Got my contact details there. Again, please call me to make an appointment. I'm always out and about in Kent, so I can come to you and talk through what your next project is. So thank you very much. I hope that was a little bit interesting and informative for you about my world of finance. And next we have Maxine Fothergill, and her business is Amax Estates. She's going to talk us through the dangerous world of being a landlord, why would anyone ever want to be one, the legal process and everything like that. Over to you, thank you.
Right, so my name is Maxine Fothergill. I'm the Managing Director of Amax Estates in Gravesend. I am what we do in my company, we do lettings, sales and block management. I'm also a trainer. I've been a trainer for the London Landlord Accreditation Scheme for 20 years. I know I look too young. But yeah, 20 years I've been doing that. That involves everything on the accreditation from starting a tenancy right through to how to end a tenancy. I'm also the past president for our property mark, which represents 18,000 agents across the country. And that was from 21 to 22. I was the president of our property mark. I spent a year, 41 engagements, literally going all over the country. And that was very interesting. But the important thing why I'm here today is I'm going to talk to, I am a landlord, so I forgot to mention that important bit. So I've been a landlord now for 25 years. Can't believe how quickly those years have gone by. And in celebration of being a landlord for 25 years, I've written a book. It's my book. And that book is actually, it's not about me, because that'd be really boring. It's actually for new landlords that are thinking about actually getting into buying properties and becoming a portfolio landlord. So it's all sort of help and advice. It starts off with my story and then it goes on to actually helping people. So that's a bit about me. So I'm now going to move on to, if it does, the technology actually works. So the real value, why would you want to, so the real value of using a qualified letting agent. Now, the one thing that you need to know, sound quite close, the one thing that you need to, jumping over. Right. One thing that you do need to know when when you are a landlord is you are 100% responsible for your properties. So regardless of whether you use a letting agent or not, you are still 100% responsible for the property. So having an agent in place doesn't mean to say it diminishes you from your responsibility, far from it, but it does mean that you can audit your agent and you know when you're actually getting an agent that you'll know the sort of agent that you can work with that's going to do the right job actually for you. So for an agent, what I would always recommend, and bearing in mind there's 170 parts of legislation and beneath it sits 400 parts of regulation. So there's a heck of a lot to learn. And this is why many people actually choose to use a letting agent. If you are using a qualified letting agent, what I would always say is use an agent that's either a Property Mark or a RICS agent. And for the simple fact that as an agent that's actually a regulated agent has to adhere to a strict code of conduct. They have to submit annual accounts independently, in my case to Property Mark. We have to belong to an ombudsman's scheme, and we have to hold professional indemnity insurance. If we are holding deposits, then we have to have a separate client accounting, which is independently inspected, and we also have to hold client protection money in place. If you use an agent, because this is an unregulated industry, if you use an agent based on it's really cheap and it sounds like a great idea, I would think again. After 20 years of training people, I've heard some absolutely horrendous stories. So this is why it's like almost a story of caution, my experience. So what should you look for when appointing an agent? Well, the things that you really should look out for is what are they going to do for you, and are you going to feel comfortable with actually using that agent? Is the agent the right agent for you? I have cut down my presentation a lot because Marion's going to talk about the legal side and I'm just talking about more the agent side. So, do you need an inventory, and what about the deposits? Well, first and foremost, if you are letting out your rental home, it's probably one of the most expensive things apart from the main purchase of your own home. So you want to protect it. You want to make sure that whoever's going to be moving in there, if they trash it, that there's going to be some sort of protection. So I always recommend, whether you're using an agent or if you're doing it yourself, always take a deposit. Now, if you're going to take a deposit, then you need to make sure that you also get an inventory in place, because it's no good taking the deposit, not bothering with an inventory, and then when a tenant moves out, the place is trashed, and then the deposit scheme will say, well, what proof have you got? What evidence have you got? And if you say, well, nothing, I just took 5 weeks deposit, then you're going to lose that. So an inventory is really, really important. But it's not a list of items. It has to be a proper detailed inventory. And if you're not used to doing that, then I would strongly recommend that you ask your agent, and they should be able to get you a really good inventory. Personally, in my company, we actually outsource them because it makes us independent as well. So it protects our landlords when we're doing that. So when taking deposits, the deposit, and I know Marion's going to talk a little bit more about that, but the deposit must physically be deposited into a deposit scheme, either a custodial or an insured scheme, within 30 days. And Marion will tell you the consequences if you don't. Okay, so understanding the small print, that is really important. Now, as an agent, and as a trainer, I have seen some contracts where they've been literally a paragraph, and then I've seen contracts which are 30 pages long. You do need to read the small print. If you are using a corporate agent, you will find that it's very much red tape bureaucracy. So if you try to negotiate, it might be extremely hard because they have written from their head office their terms and conditions, and it's very hard to negotiate. If you're using a smaller agent, you're far more likely to be able to negotiate terms. There might be things that you don't like, or there might be things that you prefer to see different, or you might want to negotiate on the fees. So do check the terms and conditions. Don't be rushed into actually agreeing to anything when you're with the agent. Take it home, read it, and then make another appointment to actually discuss it. I would definitely, for the larger agents, as I say, it's like that you're going to be stuck in a bit of red tape and bureaucracy. If you use an unregulated agent, you will have no means of recourse, so you might need to regret that one. So questions that you need to ask. Well, what I would always say is that ask the agent a specific way of how they're going to manage your property. Bear in mind, as I said at the beginning, you are still 100% responsible for your property. So it's really important that you find out how they're going to manage, what they're going to do, and what's going to be best for you. How do they work out their rental valuation? Now that's important because they might well be quite undervalued from what you're seeing when you're looking on Rightmove and all the other portals. So, do ask them and ask for a comparable report. What's the agent's fee structure? Now that's important for you because you obviously need to know how much you're going to pay and what you're going to be paying for, including how often are inspections carried out and are you going to get inspection reports? And if you are, then can you have a copy of the report so you can actually see what to expect? So they're important questions. So sorting out the legal stuff, well, as I said, I'm passing that back over to Marion and to our lovely solicitor who's here as well. So I'm not going to go into too much detail on that. So furnished or unfurnished. Now, if you're in central London, my experience is that people in central London generally will let out their properties fully furnished. If you're on the outskirts like we are here, then most of us will probably let out our properties unfurnished. A little bit of a word of caution really, if you are letting out properties that are fully furnished, then think about things like the kettles and toasters, the small items. They're great when they're first bought because you've got a year's warranty on them. When they're over a year, it means that you are responsible for those items, including televisions and licenses, by the way. But anything you're leaving in there, you become responsible for them, and it means that you have to get a portable appliance test done. So I would steer clear of putting those things in. They're very, very cheap, and I'd probably do a bit of negotiating and give them 20 quid or whatever it's going to cost in Argos to actually buy the kettle and the toaster, because it's their responsibility then. If they own it, it's their responsibility. Another word on fully furnished is if you are letting out fully furnished and you have any soft furnishings, then you must make sure that there are fire retardant labels, and if they're not, get rid of them, because if anything happens, it could be you and in a lot of trouble. Collecting of the rent. As a landlord, you will want to know that rent's coming in and it's coming in on a timely manner and on a monthly basis. And you need to ask your agent, when do you pay? It's no good if you've had a certain day on your mortgage and the agent only pays once a month. So, that's the sort of things that you really need to be asking. You need to actually know. But also, what is the agent going to do if a tenant defaults on the rent? Are they going to tell you straight away? Or are you going to wait and you're going to be chasing them? So you need to know these things. Rental guarantee insurance. Personally, I recommend everyone to take rental guarantee insurance. You can get great rental guarantee insurance through the NRLA, and they can do referencing as well, or also through your agent, you should be able to get it. As I've said before, if somebody defaults on their rent, and an average rent at the moment in this area is around £1,200, it doesn't take much to start racking up, and yet your rental guarantee insurance is on average about £350 for a year. So it's so worth doing. The rental guarantee insurance will cover your rent, it will cover your legals, and also if you go to court and you gain possession, it will also cover the cost of getting the bailiffs in at the end. So it's so worth having. So speak to the agent about that. Tenancy renewals and annual rental increases. As an agent, the agent should be using really good tenancy agreements. I would hope every agent that's a regulated agent will certainly be doing that. And they should be advising you about 2 to 3 months before the end of the tenancy So you choose whether or not you want to renew that tenancy. So at that time, then the agent should also be saying to you, the rent currently is, and they should be advising you how much the rent is, so they would also put up the rent for you on an annual basis. In this room, I know we have a load of landlords. Put your hands up if you feel a bit awkward and you don't put the rent up. You've got really nice tenants. Got any of those? Yeah, always got. Now, this is the huge benefit of actually using a regulated agent, because it's our job. You know, we are there to actually make sure that we try to get you as close to market at all times, the rent, and we would always do that rental increase for you. One, because it benefits us, and two, it definitely benefits you. So it is our job to do that. And it also, it becomes, you are arm's length, so it doesn't become this personal thing where you feel awkward and they're really nice tenants and I don't really want to put the rent up. I mean, just think about, if you was in the same job and you were working in that job and your boss didn't put your wages up every year, how would you feel? It's the same thing, isn't it? Think about why you became a landlord in the first place. You've done it for a particular reason. It might be for investment, it might well be for for your family, but it's important that you actually get those rental increases. And as we know, there's been 14 interest rates, which started in December 21. It finished in August 23. We all hope and pray that by August this year we might see some decreases, but we don't know. It depends on the flavour of the government, as we're all aware. So we hope, but what we do know is there's going to be a lot of you that are going to need the advice of a good mortgage broker, because you're probably going to be coming out of your deals and you're probably a little bit worried because the interest rates are going to go flying high. So that's why you need a good agent who's going to get your rental increases. Okay, so what happens if things go wrong? If you need to gain possession of your property, how is this going to happen? Now, Marion's going to talk more about this, but by Andrew, who's going to tell you all about what to do. So they're going to actually tell you a lot more. But as agents, we can only go so far. So we can only issue a Section 21, and then we can go to a Section 8, and then we're not allowed to go any further. So we're only allowed to go to a certain point, and that's when either the landlord or the litigant's friend, which is not a solicitor, will take over and do a wonderful job to actually get your property back for you. So, in summary, if you work full-time and you don't want to be bogged down with learning 170 parts of legislation, 400 parts of regulation below it, and keeping up to date because it's constantly changing, and if you don't want to do property visits, or I have to deal with emergencies late at night, or I had to deal with the blocked toilet call or the broken key, or I forgot my key. Also, you don't want to be dealing with the Section 13 notices on those rental increases because you're a really nice landlord and you don't want to upset your tenants. Then it's definitely worth thinking about using a regulated agent. And the great thing, which I'm sure Mitch will actually back me up on, is any fees that you actually pay to use an agent is 100% tax deductible. Yay! So, finally, my name's Maxine Pulligan. Thank you very much for listening to me. That's my little QR code for my book if you are interested. And inside your bags, I've got a top 10 tips. So there is a little presentation on another QR code. So thank you. I am now going to pass it over to my friend Marion, because we always, that's the other one then. We always do a little double act. So over to Marion from the NRLA, who is a very experienced landlord and very good at what she does.
So thank you, Maxine. We're actually employed at the hip because we haven't got a party wall, haven't we? So yeah, so we do know each other very, very well on that score. So that's me. I've been a landlord since 1974, so I outstripped Maxine on that score. And in fact, when I became a landlord, there's no such thing as buy-to-let mortgages. It did not exist at all. And my late husband was very much into conversions. So he would be buying an old property, probably most of them had different tenants, waiting for the inevitable day when the sitting tenant moved on, and doing conversions. And we did a lot of buy three, keep one, get one free, because it was a rising market in the 70s. In the 70s, going into the 80s, property prices were going up at a phenomenal rate. So it was very, very easy in those days to buy one and get one free. Because you sell one, you've got the you take your money out from that. Very, very different world to when buy-to-let mortgages came in. And in fact, because we own so many properties when buy-to-let mortgages came in, we weren't even allowed buy-to-let mortgages in those days. So it's really just emphasising the lot of experience that I've got and the fact that actually you can self-manage. I'm doing the same thing that you're doing. So, yeah. So I've worked for the NLA since 2007. We then joined with the RLA, which became the NRLA, probably the largest landlords association, and we're there for our members, for our landlords. So we've got over 110,000 members, and we take 2,000 calls plus per week to our advice line. So we're there for our members, and we get a range of calls. So sometimes we're like Marjorie Croops. Anybody remember Marjorie Croops? Well, not many people then, obviously, but we are somebody where you can come and share your worries and share your concerns with. But also, we'll take you through from cradle to grave, managing your property and answering all those questions. What AST? What's an AST? What's the short-term tenancy? Which one do I use for my tenants that I'm moving into the property? So we're there, and we've got a really comprehensive website to help you with that. So Maxine's gone into a lot of detail on the landlord-agent relationship. And really what I want to emphasise is what Maxine alluded to, is that the liability always lies with the landlord, the enforcers, the fire brigade, your local council, the private rented sector team from the council. Even if you've got an agent acting for you, it's going to be so even if you have an agent acting for you, they're going to bypass the agent, and it's your door that they're going to knock on. So be very, very aware that you need to know these 170 pieces of legislation that Maxine has told you exist. And we do accreditation, we do landlord training, and I always say, for a new landlord, a naive landlord with an experienced regulated agent is a good way to start off, because they will guide you and you can follow it through. But we're there to help you. Even if you're using an agent and you're not quite sure of something, then do come on to us, because we're there to support you. And as Maxine said, having that clear contract is very, very important. Maxine mentioned the big corporate agents, and they have what they call an in perpetuity clause in their contract, where you just can't get out of it with them. As long as that tenant is in the property, they will be seeking commission on that tenant, even if you sold it. So some of these big clauses in the big contracts, you need to know what's in those contracts. We're also very, very concerned about the increase in rent-to-rent scenarios. So a rent-to-rent scenario, if you've got the person like me who owns the property, and I might say, actually, I'm just going to let it out to somebody, and they can manage it all for me, and I don't mind what they do with it. They can put some tenants in. I'm not concerned what happens, as long as they guarantee me the rent. Now, there's some very, very good professional rent-to-rent organisations. I let out some of my properties to a council. And I did say once, well, actually, you know the council's good for the money, but a lot of the councils now are actually going bust. But in fact, they know how to manage those properties, and they know how to regulate them. So there will always be a professional relationship. And there are some very, very good rent-to-rent standard companies as well. But there's an underworld in the rent-to-rent market, and that's what we're very, very concerned about. An underworld where somebody can set them up as a limited company. As Mitchell said, you can set yourself up as a limited company. You've got no liability. If somebody sues you, you can walk away from that. So if you let your property out to this middleman who's a limited company, and the enforcers, the private sector team from the local council, come along and say, actually, that property is a house of multiple occupation. You should need a licence for that property. oh look, and all the tenants in that property, because it doesn't have a licence, can claim a rent repayment order for the last 12 months. Now that's where you're very, very vulnerable. At the moment, Bakusin versus Jepson, a High Court case, found that the middleman, the rent-to-rent man, was the person who was liable for that rent repayment order. But there's a strong politicians who are trying to get that, get new legislation in place that it would be the superior landlord who is responsible for those rent repayment orders. So be very, very careful if you are renting your property out, you know who you're renting it to. And in fact, the trading standards have got a lot of consultation and investigation on the rent-to-rent schemes. And it's not probably who you might come across, but there is this underworld, the third world of agents, sorry Maxine, agents in inverted commas, who will rent your property from you and rent it illegally. Non-regulated, yes. But following on from that, a lot of us might manage properties for friends or family or relations. And what's very, very important is that they then become responsible for client money, for any deposits they're holding for you, for any rent they're collecting on your behalf. So they should be covered by client money protection and have their own PI insurance as well. So, but if you're doing it for your friends and family, okay, you might want to regulate it for them, but make sure you don't touch the money. So make sure they're still in control of the money. They've got their own bank accounts, and they're dealing with the money side of it. You're just doing the regulations and the day-to-day managing of those properties. Just be very, very careful that you don't obscure the guidelines and start handling the money. So we've got, if you want to take a QR code, but you'll get a copy of the slides anyway. So hopefully that's clear enough that you can take, you can scan that, and that takes you through our whole what we call landlord resources pack. So it takes you through the advice of finding the tenant. It takes you through managing that tenant. Maxine mentioned referencing the tenant. At the end of the day, your property that you're letting out is a huge investment. Okay, it's your tenant's home, and never lose sight of the fact that your investment is your tenant's home. But you want to make sure that the tenant that in that property is the right tenant for the property. So just be very, very careful that you are following through and doing all the procedures that you need to do. Finding the tenant, referencing the tenant, and getting the correct paperwork in place. And again, Maxine and I are overlapping again here as well. If you're having to go to court, Maxine said that she can issue the notices for possession, the Section 21 and the Section 8 notice for possession. She can sign those and she can serve those. But the action itself can only be brought by a landlord or a solicitor. Now, if you're using an agent, the agent has collected all that paperwork for you. What you need to do, because you're the principal in the arrangement, is you're instructing the agent. So you should be making the agent aware that you want copies of all that paperwork. You want copies of the referencing, the tenants, because the insurance company or mortgage company will want to know you've done due diligence. And we see a lot of the time landlords saying to us, well, the agent's done it all for me, I haven't got any of that paperwork. But it's crucial that you have the referencing for your insurance company, for the mortgage companies. You have copies of the tenancy agreements, copies of evidence of service of all the relevant notices, because you need all of that to start instructing a solicitor. So don't let an agent say, oh, GDPR, I can't give you that information, it's personal to the tenant. You're the instructor, you are the principal in that triage, principal, landlord, agent, tenant. You're the one who's instructing the agent, and as long as the agent knows you're going to want a copy of that, and they tell the tenant under GDPR, then they're perfectly entitled to share that information with you, and you need it. If your agent goes bust, goes off to the Caribbean and says, actually, I've done really very, very well, I'm off. How are you going to get possession of your property without the paperwork? And that is absolutely essential. There's a case going through at the moment. It's been granted the second appeal, and it's so obscure. and that you wouldn't really believe that it could exist. But the whole case hinges on, is service by post acceptable? Now, tenancy agreements say you were served by first class post. We've done it for years, ever since short door tenancies and any other notices you had to serve as well came into existence, service by first class post. It's now got to the Court of Appeal for a second appeal that actually service by post isn't a good service. So we as the NRLA are allowed to intervene, so we'll be able to bring our own evidence as to why it's so important that service by post is accepted. And so that's something else we do on behalf of our members. We intervene in such significant court cases. You think how many notices that you have served by first class post because your tenancy agreement says you can. It's standard. All the sectors are doing it. So it's a very, very pivotal case. Whether or not service by post or first class post is deemed not acceptable service. And also service by email. Now, you should only be serving by email if you've got the tenant's consent. Now, have you got that in writing? Your solicitors, not, are going to ask you for evidence that you can serve by email. So make sure you've got that. There's 3 documents under the Deregulation Act which you have to prove service of. Very easy to serve them by email, but where's your proof that you've done it? So make sure the tenant consents. And what we have as a document to ensure you've got that evidence is a checklist of all the documents to serve before your tenancy commencing. And you just go down that with your tenant and say, serve that, tick and sign. Serve that on, tick and sign. So you've got this checklist that you can produce to the courts and say, this is my evidence that I've served all those documents. So we're talking about section 21, and I think Simon's going to talk about this in more detail. Yes. Try not to overlap here too much for you. But what I really want to emphasise to you is deposit protection. Maxine has highlighted the importance of having it and linked that in with rent guarantee insurance as well. Your deposit is capped at a maximum of 5 weeks. Doesn't go very far if your tenant's got rent arrears and has trashed that property as well. So it's all about getting the good tenants in, and rent guarantee insurance helps with that as well. But deposit protection, it's been around since 2007. It can trip you up in ways that you don't expect. And one of the ones that we see landlords having a lot of problems with is, do they know who a relevant person is? Do you know who the relevant person is? If I ask something, so good have you nodding, Harry, because I know you know that. So who else, would anybody else like to say who a relevant person is in connection with deposit protection? Yeah, no, so all right, so I'll help you out. It's not a guarantor. Normally, everybody would talk out to me and say, oh, the relevant person in a deposit is the guarantor. It's not. A relevant person is the person who has paid that deposit on behalf of the tenant. Because it's their money, they need to know what's happened with that money. So they need to know it's been protected in one of the government schemes correctly. And so often now, we see that the relevant person hasn't been served with the correct information. It stops you getting possession under section 21. On the court form N5B, one of the questions is, have you protected the deposit, proof of protection of the deposit? Have you served this on the relevant person as well? And nearly all landlords will say no, because they don't know what a relevant person is. So do make sure you know who has served, who has paid that deposit on behalf of your tenants. And it's just happened to my daughter and my grandson. My daughter's paid the deposit on behalf of my grandson, her son, and the agent, a regulated agent I have to say, actually asked her to send proof that she paid the deposit and asked her for a screenshot that she paid the deposit. She's had none of that information served on her at all. So she's going to wait towards the end of the tenancy and say, actually, you should have done X, Y, and Z. Here's proof I paid the deposit. Here's proof you knew I paid the deposit. I'm entitled to ask for up to 3 times the deposit back. And that's quite a serious amount of money. She knows that because I've told her she can do it. But as soon as a tenant starts going to your local authority for help, they will be asking all these sorts of questions because the local authority are minded to try and keep tenants in their property. Because at the end of the day, there's nowhere else to house the tenants. So their ethos is we need to keep the tenants in their homes as long as possible. So they will be supporting the tenants to find out anything that you or your agent actually see. And just think, you've got rent repayment orders that can be placed against you. The return of the deposit. You can't get possession of your property back under the no fault route to eviction. So many things you have to check if you've gone through. And you do have to micromanage your agents to a certain extent, because at the end of the day, enforcement is brought against you, and it's your pocket that's going to get hurt on the rent repayment order. 12 months rent if the tenant's successful on a rent repayment order. And so the document, the prescribed information, the UPC, the gas safe certificate, and how to rent, Simon's going to touch on. How to rent fines, they've absolutely escalated this year. I had a little bit of pain when he told me. So the how to rent fines since the 1st of January are up to £160,000 now. So landlords who haven't done their right to rent checks have paid out £160,000 in fines. Oh, I'm on the wrong slide. Wait a minute, come on. Yeah, right, I must have picked up. So on the right to rent. So the right to rent fines now have gone up. And if you don't do a right to rent check on everybody that's going to be living in your property who is over 18, you can be fined £10,000 a person. And it's not just the people who are named on the tenancy agreement, it's anybody you know who's going to be living in that property. So make sure your tenancy application is correct. You want that on your tenancy application, everybody to be named who's over 18, and you've got to evidence that you've done the right to rent checks on everybody that's going to be living in that property. And it doesn't matter where they're from. It might be a cousin of yours, and you know they're English. But you've got to do the right to rent check to establish your statutory excuse, because otherwise you're liable for that £10,000 fine per person for the first offence, £20,000 for the next offence. So, and potential imprisonment as well. And if your agent is saying, yes, I'll do it for you, what the legislation says, it has to be done by the landlord. So you have to specifically discharge your duty to the agent. Has the agent got that form ready and prepared for you to do? Because otherwise it comes back to you to say that you should have done the right to rent check. Tenancy deposit protection. I said, yes, it's tripping us up. And the latest case going through the courts is is in connection with an unsigned deposit protection certificate. Now, legislation says what landlords should do is protect the deposit with one of the government schemes, tell the tenant what they've done by means of signing a deposit protection certificate and giving it to the tenant. This court case has said, well, actually, you didn't have to sign the deposit protection certificate because it was okay, because the letter accompanying the deposit protection certificate said on it, please find and enclose a copy of the terms and conditions of your tenancy deposit, and that was signed, and therefore that was passed as good service. That's been appealed again. But there are so many ways now where you can get deposit protection wrong. And I know a lot of landlords now are walking away from that and using guarantors and rent guarantee insurance instead, because of so many incidents where it can go wrong. And it's really just quite surprising. And just another quick alert. Gas safe certificates, we're all doing them. You all know you have to have a valid gas safe certificate before the tenant moves into the property. But they're being challenged now because that gas safe certificate is a prescribed form and it must have certain information on it. So section 21 is your right, but your route to possession. You have to show that you have to prove you've served a valid gas safe certificate. Well, ones that have failed are because the gas engineer put the wrong date on the gas certificate, so therefore that wasn't a valid gas safe certificate. The landlord's name hasn't put on it correctly, Actually, I looked back at some of my gas safe certificates and they just say Marion. So I'm not sure about those. So those have failed because they're not valid gas safe certificates. So don't just look at your gas certificate and say, oh, good, that's passed. Is everything else correct on it as well? So that's as far as I'm going because I've been given the cut off. Just a little alert. Electrical installation condition reports. It came in 2020 that all new lettings had to have one. 2021, all properties had to have your electrical certificate. What the associations, the regulation board for electricians are saying, there's not enough electricians to complete the certification on the 5-year renewal. So it might be worth getting them done early. So that's me. That's benefits of joining us. 10% off at B&Q. I just bought my garden furniture, paid for my membership. So have a look for those and QR code. You'll get that in your slides, and you can quote the code 16 and join for £84. That's you plus one. So thank you very much. Hand it over to Simon.
My current practice. Last but not least, I've got some roles with heritage. They're and I won't do all of this. More seriously, I'm starting to get some upgrade, right, there we go. My role tonight really is to give you an overview of how to have possession of a property let on a short stop of tenancy where the tenant won't leave voluntarily. My aim, however, is not to depress you, but also to reassure you that there are well-trodden routes to possession in the unlikely event that you need to take legal action. I noticed the slide from Marion where 6% was referred to. So it is relatively rare, but it can happen. So that's where we come in, really. Two key areas, really, for possession. You've had reference to them already. The first is the Section 21 procedure or notice, also known as no-fault eviction. The second is the Section 8 notice, a fault eviction, where the tenant has broken the term or terms of the tenancy agreement. You can do both, and often I recommend that you do as a backstop Section 21, but I'm not back end of a Section 8. But if there are no breaches currently, I'll hear a bit more about that later, Section 21 is the only option really going forward, and that is a no-fault ground personally at present. Now, turning to the notice. You can use the Section 21 notice to evict your tenants, either on or after a fixed term, short stop or tenancy ends, if there's a written agreement, or during a tenancy with no fixed term or end date. So on the face of it, you think, so far so good, but having heard everybody else talk tonight, you realise that there's a punchline coming which says, yes, that it's not quite as simple as it might first appear. It used to be, but over recent years, it really has got much more complicated. Again, I hope you can read all that, but the slides will be available. So the big however, and we've already touched upon this, so just to sort of reiterate it really, prior to serving a valid Section 1 notice, there's key documentation that must be in place. And certainly over the last sort of 12, 14 years, it's become a minefield. And as everybody else has referred to, any default in the documentation can lead to a Section 21 notice becoming invalid. And being blunt about it, that can lead to finding out quite a long way down the track that it's not been spotted, and you may have to start all over again. So that is why it's absolutely crucial the documentation is in place and it's thought through as well, because obviously you think you might have it right. Marion just referred to gas safety certificates, which you thought were a slam dunk, and it turns out they aren't. And the judges are looking for every excuse not to grant the order, because they're almost like the watchdog in effect. So we have to get it right. So it's a team effort. So as you can see, really just reiterating, we need deposit protection certificates, gas safety certificates, energy performance certificate, the EPCs we've made reference to, and the how to rent guide. And just keep an eye on the how to rent guides. The government update them periodically. The most recent one, 2nd October 23. But just keep an eye on that, because what you might think is the right guide may not be. So just be 100% sure if you can do it yourself, obviously not through agents, that you get that bit right. There is a bit of a fallback though, in the sense that in certain circumstances you can effectively get yourself out of jail by any gaps you might have in your paperwork. The priority really is to make sure that any gaps are remedied prior to serving a Section a section 21 notice. And in that case, even if you haven't done it at the start, famous last words, you should be all right. But the key thing is to spot the problems before you serve section 21 notice, or you have a major problem potentially with the judge or reviewing it on paper. So the only other thing is deposits. And again, it's been referred to, but there's no get out for a deposit scheme. If you haven't registered in that 30-day period, you cannot serve a valid section 21 notice, you can serve a section 21 notice. So as you can see, and you've already heard, it really is quite fiddly. But that's what we're there to do, is to guide and to protect your position. So moving forward, the notice itself, not surprising, there's a prescribed form. It changes from time to time. So again, obviously please check on the gov.uk website. It must clearly state the tenant's name and the property address. And always double check the spelling. It's probably a bit picky, but just don't want to give anybody any opportunities to find fault with it. So just focus on that. So whether it's your solicitor doing it, or your agent doing it, or indeed yourself doing it, these are key points really. And obviously you have to give a minimum of 2 months notice that possession is required. So that's the other point really, section 21 always 2. The service of notice, again, has been mentioned, but it really is central to all this, because again, you can really fall foul quite easily depending what's going on with the judge, really. So obviously, always check the tenancy agreement to see what the provisions are in there for notice services. Service of notice, sorry. We always recommend personal service if possible, not always possible, financially viable, but ideally by the right process server, 150 quid plus VAT. Personally, I think money well spent, but that's up to you. Or by the landlord or agents themselves. If not, we normally serve by both first-class post and by recorded delivery. The recorded delivery may not refer to it in the actual tenancy agreement, and we know about Marion's case that referred to there, which is currently going through the court, so we're keeping an eye on that, as she says. So, what happens under Section 21 is the tenant does not vacate after the notice expires. Well, the bottom line is you have to get a court order to obtain possession. You cannot evict on a short-hold tenant without a court order if they won't or can't leave, even if they're even if you want them to. If they refuse to go, you have to get a court order. Otherwise, you're into unlawful eviction territory, which you do not get anywhere near. The process is a paper process. It's called the accelerated possession procedure. You don't have to give any reasons for it. There is it's no fault for a reason. That's why it's called that. But this procedure is not available for Section 8 where there is fault on the part of the tenant or alleged. We need to prove that. I'll come to that in a minute. So basically the process, you have to fill in a standard N5B claim form. All documents that we've mentioned already have to be completed and exhibited with the court form. A while ago it was quite a small form, it's now 20 pages, which is crazy, but that's the way it is. But it needs doing, and it's a useful checklist, in fact, as to what you should be sending, but it does take quite some time to do. You can apply for fixed costs if you instruct solicitors. Don't spend it all at once. £69.50, no VAT on issue, and £79.50, no VAT on judgment, and obviously subject to enforcement, of course. So unfortunately, no one near the solicitor's fees you incur despite our best efforts. And the court fees are presently £391. That's just gone up. And then you sit tight and wait, and it disappears off into the court system. You'll be twiddling your thumbs for quite some time, unfortunately, because the court system is awful, frankly, and you can't do better than that. There's no point ringing them. Anybody who's tried to ring the county courts will know that you get half an hour to an hour of waiting, then they put you through to the next court. You wait. If you're lucky, and Andrew will subscribe back to the room, so wherever it is, we get a name and you leap on them like a favourite uncle or aunt. You suddenly might actually get some help, but it is so frustrating to deal with it. But basically, it disappears off into the ether. In the accelerated possession procedure process, it's paper-based. The court reviews the documentation, you don't know what's going on, you sit tight and wait, you go notice of issue, but that's it. And then basically the tenant will be sent the paperwork, and they'll have 14 days in theory to respond. And then in due course, either you write in, the court tells you what's going on. The long and short of it, if there's no valid defence received, the court has the power to make a possession order without the need for a formal court hearing, which obviously keeps the cost right down and speeds things up. So that's the idea behind the process. I mean, if there is a defence, to be honest with you, it's quite rare, but there's a defence that will get farmed out, but that's the scope of their thing. So if you actually get an order of possession, which I think is the case in most cases, all paperwork in order, judge happy. Normally it should be 14 days, but it tends to be 28. The court has this discretion on exceptional hardship grounds to order up to 42 days, but that's the maximum. And the order will also confirm the cost that the defendant is required to pay. And then here we go again. What happens if the tenant still does not vacate after the order for possession? And that's quite regular, unfortunately. Usually it's because they need to be rehoused by the local authority. They can't leave early because if they do that, they make themselves intentionally homeless. So there's to some extent, through no fault of their own, stuck between a rock and a hard place. So you just have to go with the flow and keep going. So you have to apply to the court for a bailiff's warrant, fixed court fee for that, £130. You'll then be given a date when the bailiffs will attend, and at that point, subject to any applications, which hopefully won't happen or not justified, you will have the benefit of bailiffs coming in and assisting with block changing and taking reasonable steps and forth to recover possession, unless the tenant vacates beforehand. The usual time frame, and it's a bit vague because it does vary from court to court, but when you start from the Section 21 process, I put 6 to 12 months on the slide, and that's frankly quite depressing, but I'd say more realistically, generally, I'd say probably 6 to 8 months, that's sort of territory, and that's from Section 21 service through to bailiffs, because I mean, it is just that's, the Section 21 to Section 21, but it's the rest of it, court delays, bailiffs instructions, a couple of months, maybe more, and unfortunately there's no magic fix. You could apply to registry in the High Court sheriffs, I suppose, for bailiffs, but even then it's not that quick. So assuming they're still paying rent, it's not a disaster, but it's very frustrating. And as I say, the reality is that you just have to be patient with it and see how it pans out. Well, that's the end of the line, so to speak. So eventually bailiffs will be the last port of call. So that's where we are. So that's Section 21. The alternative is Section 8, which is fault. And the grounds are found in Schedule 2 of Part 1 of the Housing Act 1988 as amended. And it's fair to say they are not a riveting read. In fact, they're the classic cure for insomnia. However, they're important because obviously you need to know whether or not you can get your case within one or more of the grounds. There are a number of grounds to seek possession, which the court will either deem as mandatory or discretionary grounds. Mandatory grounds are grounds upon which the court must order possession. The most common being rent arrears, that's ground 8 in fact. And for example, for a monthly tenancy, you need to show at date of service and notice 2 months rent arrears and also at the date of the hearing. And sometimes you find that tenants are quite savvy and pay the rent below the 2 months. And then you're suddenly stuck not having that mandatory ground. So it can be quite frustrating, but that is the reality of it. Discretionary grounds, the court may grant an order. So, for example, some rent lawfully due not paid, persistent non-payment or delayed payment of rent, or another breach of tenancy agreement. And again, that's a discretionary thing. Now, in my experience over the years, discretionary it's not quite no use whatsoever, but you can find suspended orders, you can find adjourned orders, but basically, if you're going down the discretionary route, that is not necessarily a wise decision because you may find that you don't get that much further forward. Actually, it's quite frustrating. Section 8 notice periods depends on the type of ground you're going on. For example, the ground 8 for non-payment of rent is 2 weeks, other grounds are 2 months, but they're fairly rare, those. So it's a 2-week rather than a 2-month process. The notice itself, again, the prescribed form, is more detailed than a Section 21 notice. It has to explain the grounds relied on in full and provide an explanation as to why. So you don't go breaking down the rent arrears, for example, or breach of tenancy agreement, something like that. Otherwise, you've got a defective notice, almost certainly. But again, you have to obtain a court order for possession if they don't leave voluntarily. There's no written procedure, so it has to be an application for a court hearing, and you have to appear at court, whether represented or direct access or by yourself. On average, I'd say it's probably between lodgement of the paperwork and actually getting your first hearing, 2 to 3 months, depending on the court. And obviously, the same principles apply for Section 21 for the timescale for the order if you can prove your case, prove the ground. Costs, again, case if you should be able to get some costs back, but it would be fixed costs on the claim form plus assessed costs on the day, but they're never anywhere near, unfortunately, what you've incurred. 45 times like that. It's a longer process, and again, it's bailiffs necessary if the tenant doesn't vacate for usually the same reasons. So that's the second option available. As I say, you can run them together, but if there's no breach, you're stuck with Section 21, really. So, now, the elephant in the room. I'm not a politician, probably as well, but you will have seen, I'm sure, if you follow these things, that the Conservative government, the present government, have been trying to get through the Renters Reform Bill, and for various reasons it didn't make it. It cut off when the election was announced, and so as we sit here today, Section 21 still exists, and so the problem is that both main parties have pledged to get rid of Section 21. So I suspect it's a reprieve rather than a never going to happen situation, but we're going to have to wait and see. It's unclear timing-wise. Labour are committed to dealing with it immediately, but certainly Conservatives, and that's the 2019 manifesto, and here we are in 2024 with the court service in disarray. So the problem is no one's got a time machine. I have no idea what it's going to take. I think they're going to do it. I have no idea whether they're going to follow similar lines to the Conservative proposal. Probably are, I think. But there will still be grounds for possession. I saw reference to there being three non-payments of rent, forgive me, being sufficient for a mandatory grant for possession in a 2-year period. So there is some hope on that front, but the whole point of no fault possession on Section 21, that I think is a matter of time before that goes. So I think it's unlikely to be retrospective. Chaos, frankly, if it was. So I would hope that there will be a reasonable period of time for landlords and landladies and agents to adjust. The Deregulation Act was a 3-year lead-in period. I doubt it's going to be 3 years. Personally, I expect it to be a lot quicker than that, but who knows, but you can sort of see that coming. But there will still be grounds for possession, but there will not be a no-fault ground, I don't think, going forward. So we're just going to box a bit more cleverly as landlords and landladies. So having changed out no end of that last setup, apologies, but I think we have to rehearse it. That's all from me from today. Thank you for listening. I just mentioned that Parker Press will offer a free initial consultation, and there's a QR code at the bottom of there. It'll be on the slides. So do contact us if you need any help with any legal conundrums. Also happy to help. My colleague Andrew Whittingham is here. He's also an experienced property solicitor and trade solicitor. And so if you have any questions, just please come and find us, and we'll do our best to assist. So thank you so much for listening. Much appreciated. And thank you again. And over to Mitch.
Thank you, Simon. So we've obviously covered a lot of points this evening, and whether you're an experienced landlord or you're starting out on your property journey, there's a lot to cover. So as I started off this evening, I mentioned about structuring your property portfolio the right way from the start. So please do come and speak to me if you'd like to book in a one-to-one, if you need any help on this. It is a minefield out there when it comes to property, but don't panic, we're all here to help you. Steer clear of it. Thank you for listening.